6 of the world's 12 fastest growing countries are in Africa. I'll tell you about the reasons why I decided to invest in African stocks. Hi, welcome to Money Anna. This year is very special from many perspectives, and precisely because stock market investing in 2020 is such a roller coaster ride. I think the only reasonable thing to do is to buy securities you like whenever you have money. My commitment is to spend considerable amount of time monthly researching and finding stocks interesting in terms of value or growth, and buy these stocks and tell you about the reasons why I picked exactly these stocks. My plan is also to report to you at the end of the year about the performance of those companies I invested in and how much money I made or lost to the moment. Subscribe to Money Anna to get these monthly updates, and let's look at those stocks and those reasons together. If you don't mind this time, I'll start from the reasons, and at the end of this video, I'll tell you what exactly I purchased in July. As you know, Africa is an emerging market, so the best time to invest in Africa is now. Very soon, it will become as obvious for you as it is for me now, but there is one major con to investing in Africa, which is it's too much risk. But risks and profits are inseparable twins. High-risk ventures are frequently associated with high profits. Recently, I was surprised to discover that Africa is actually the most profitable region in the world, and Africa's economic growth prospects are among the world's brightest. 6 of the world's 12 fastest growing countries are in Africa: Ethiopia, Democratic Republic of Congo, Cote d'Ivoire, Mozambique, Tanzania, and Rwanda. Further, between 2018 and 2023, Africa's growth prospects will be among the highest in the world, according to the IMF. Good news! Sectors where foreign companies would have a comparative advantage, such as banking, telecommunications, and infrastructure, are among the drivers of current economic growth in Africa, creating clear investment opportunities for foreign businesses. Africa's growing youthful population, amidst an aging population in most other regions, constitutes a formidable market. The continent's population is predicted to grow up to 4.39 billion by the next century. Africa's youthful population contributes to an abundance of labor, which is one of the region's highest potentials for labor-intensive industrialization, and lowers production costs. And it leads to benefits that far outweigh the costs of doing business on the continent. Now, think of Africa's abundance of raw materials needed for the production of goods. Africa is estimated to contain 90% of the entire world's supply of platinum and cobalt, half of the world's gold supply, 2/3 of world's manganese, and 35% of the world's uranium. It also accounts for nearly 75% of the world's coltan, an important mineral used in electronic devices, including cell phones. Africa offers one of the highest, if not the highest, return on foreign direct investment in the world. According to Freedom House, 63% of Africa's population now lives in countries designated free or partially free. Compare that with Asia, which has a score of 66%. Most African countries now have functioning democracies. It's a very different picture from what it was 20 years ago, and this positive trend keeps going up. Frankly speaking, I was very skeptical about Africa before I discovered all these facts and read some studies on recent Chinese investments in Africa. But now it looks like still very risky, but very interesting and promising region to grow one's wealth through investing. The easiest way to invest in Africa is through ETFs and mutual funds. And although I'm not a big fan of those, when it came to investing in Africa, I actually decided to purchase ETFs instead of separate stocks. Not only are these funds traded on the United States stock exchanges, but they also contain built-in diversification, and at the end of the day, it costs far less than manually building a portfolio of foreign stocks that trade on foreign stock exchanges. The first ETF I purchased is the MSCI South Africa Index Fund, EZA, which is now the most popular South African ETF and also is the only pure play to invest in the country. EZA targets South Africa by tracking the MSCI South Africa Index, which targets publicly traded securities in the South African markets. Some of the top holdings include MTN Group, Sasol Limited, and Naspers Limited. Some of the top sectors represented in the funds are financials, materials, telecommunications, and consumer discretionary. And the second ETF I invested in July 2020 is AFK, Market Factors Africa ETF. AFK follows the Dow Jones Africa Titans 50 Index, which focuses on companies that are located in Africa, are listed on the African Stock Exchange, or conduct 50% of their business in the region. AFK targets a broad range of sectors and African countries, including exposures to some less traditional frontier markets. Some of the top holdings in the fund and index are Nigerian breweries, tallow oil, some major banks, and Orascom Constructions. And as for the benchmark, the weighting of a country in the index is determined by the size of its gross domestic product. Larry Seruma, Chief Investment Officer of Nile Capital Management, says many investors are missing a tremendous opportunity for growth in Africa. I don't want to be among those, and although Africa ETFs might sound like a crazy idea to some of you, I decided to further diversify my portfolio with those. With their natural resources, large and very young population, current digital transformation, high demand for commodities, very low correlation with domestic or other emerging markets, African markets sound like a great idea to me. I know and I understand the risks, but I'm okay with them. Do you still think it was a wrong investment decision? Please comment below this video and provide your reasons. I'll appreciate your participation in my journey, and I will gladly answer any questions you might have. And please subscribe to Maniana for more content tailored for curious investors just like you. Enjoy your day. Bye.